3, 2, 1. Welcome to the Forex Trading Show. Forex trading live every weekday morning. Real trades, real profits, zero analysis. Set back, relax, and get ready to profit. And now, your host, Terry from FXWithTerry.com.
Good morning, fellow Forex traders. We are going to cover three very specific things today. We'll glance at gold. It's making some moves. Those moves will freak out people that don't understand how Forex works. We will look at just some overall results, a couple different accounts that we got running. We'll look at the free trade. We're looking at it right now. Something very interesting happened this morning. Very interesting. We'll look at that. And I want to spend some time talking about how to trade a small $1,000 Forex account. That's small. Oddly enough, because of the distrust in the market and the number of people that have been burnt by, I use the word signals, right, by other people's trades. Nobody's getting burnt by what I do. If you follow what I'm telling you, you're not getting burnt. What's burnt? You're losing accounts. You're constantly losing. We don't do that. My system doesn't lose. You don't have to lose if you don't overbid. You don't have to lose if you're not trying to get rich overnight, and many people are, especially with a $1,000 account. Bro, I've got accounts that are hundreds of thousands of dollars. And I'm not trying to make the money you're trying to make on a $1,000 account. Maybe a little bit of an exaggeration, but someone wanted to make $1,000 to $1,500 a day and wants to know what size of an account. We talked about that last week. I think probably one of the best answers was, well, you need $250K. You want to make $1,000 to $1,500 a day, and still at that level, you're really going to have to push the limits. Let me give you an example. Look at this trade that we're in. This is a free trade signal I sent out few days ago, beginning of the week, I think. EUR-CHF. It's went sideways, or has it? We came a few pips from taking profit on all three of these trades today, and then it just went back down. So I went and looked at the news. I didn't see any news. I shouldn't say I seen some news on Euro, but not high impact news. Check this out on the chart. This is the day chart. I don't know if you can see this, but the wick, the price is down right now, but the wick goes all the way up to right here just before the take profit. That wick, I can't really draw a straight line with this. That wick went that far, pushed all the way up, just barely took profit, and now it's back down again. So that's a manipulation. However, if you look at this currency pair, this is the day chart. Just look how sideways this is. They're looking to do some sort of breakout here. If it's in our favor right away, it will be up. If it's not, we'll add some more trades. This either way is a good trade. It's a good trade, especially if you scaled into it properly and you didn't overbid to begin with. But what's interesting is if that probably had happened in the middle of the night, right? What's interesting is if you're paying attention to it, you could have manually taken profit on this. And all three of these trades were in profit. It just wasn't quite enough for the algorithm to take it. You could have taken it manually. I didn't see it. I wasn't watching it that close. We just haven't had enough movement. Now let's go look at a couple different things. Let's look at gold, but let's also look at it on my account where I'm massively over trading and over leveraging, just so I can use it as an example. I believe it is not this one. Why is this? Okay, here it is. It's a brand new account, so I haven't managed to memorize the account number. So check this out. So we are in this particular account. I started at $3,000 not quite a month ago. We're up $2,357, nearly doubled the account. We will double this month. But these two trades here are from what's called the one profitable pair feed that I send out. And then we're in 3 gold trades. Now, people, they haven't done it yet, but I can almost like feel it. They're going to start freaking out about this gold trade. Because gold can tax your account a lot more than a standard currency pair. It just can. And it will. In this case, we had a major pullback from these all-time highs. I've heard buzz that it's going to $3,000. I don't care. I'm trading the market. Let's go look at gold here. Major pullback today, and here's what if I do it on the 1 hour chart. No, I think it was the 30-minute. Hold on. I think it's the 1 hour. Let's take, yeah. So you can kind of check this out here. So we had a buy trade up here. It backed out against us. We did another buy trade. It backed out and had this huge wick down here, this wicked area, but the algorithm was like, okay, I'm not going to take a trade in that volume. As soon as that wick pulled back, it entered another buy. Okay. The system doesn't show it's a ghost. It's a silent, hidden take profit on the chart. It does the system doesn't show the take profit, because the take profit is actually based off of, I told this algorithm to look at an overall profit for the day. On this particular account, the overall profit I'm asking it for is $50 on gold. If you look at the history here, gold has made $40, $53, and it's in that final trade. So it's going to end up making just a little bit more than that. So looking really good, $44 for the day in this particular account. And in this particular account, again, I'm pushing it really hard. So this is probably a good segue. Back before we do that, let's go back to the chart. I want to show you something. This is where people lose their shit. Uh-oh, your algorithm is wrong, Terry. It's not. In fact, this is how we make the money. We enter, and it either pushes to take profit immediately, or it pushes against us. It's a 50-50 deal, right? It pushes against us, we scale into it. But this is where the big money is made, when it does a pullback and we are in the trade. This is almost what I want it to do. Now, let's talk a little bit about account protection. So in this particular account, I am at 2,800% margin level. This is when I'm starting to think about hedging. I'm not going to hedge yet. I'm not going to do it yet. In this particular account, I'm going to push it right to the ragged limit. I'll probably start hedging at 1,000% margin level. However, this final gold trade has entered, and it's slightly in profit. Something I'm thinking about doing from a educational management type standpoint is I might start, let's say this goes red and I feel like it's going to push farther against us. I'm going to start doing, I want to test and practice what would be considered multiple hedges. Okay. Typically the mindset is I've got to hedge at the proper time and only hedge once, just to protect the account, just to protect my margin level percent. What I would like to practice, and I have not done this a lot, but conceptually this is pretty good. So let's say this third gold trade here went red, okay? And I hedge and it goes against us. And the system adds another trade. The moment the algorithm adds another buy trade, and I'm in a sell trade at, let's see, what are we in? $2, $2.50. So if you add up these total, my first hedge would be a sell at 0.25. Okay. If it added another buy trade down here, I would hedge that buy trade again at exactly what the lot size was. If the algorithm added another buy trade here, I would hedge it. So what I'm saying is, you do your initial hedge. If it goes against you, and listen to me here, because it's kind of mess you up. That original hedge that you placed will be in profit when the algorithm adds another buy trade. And then that hedge could potentially go into profit. And the algorithm adds another buy trade as the price pushes against. And then you add another hedge. Your brain will say, oh my God, look at these hedge trades. They're a lot in profit. I'm going to take that profit. You will lose your ass because those are protection orders. They are simply protection orders. When that profitable hedge comes back to break even, I get out of it. When the next profitable hedge comes back to break even, I get out of it. And here's what's interesting about that. So I want you to think about this, and it's kind of hard because I'm talking about it just verbally. If you're in 3 different hedge trades to protect this gold basket of trades that's going against you, you add a hedge, the algorithm adds a trade. You hedge that, the algo adds a trade, you hedge it. I believe in my thinking process here that is better than trying to hedge one time and potentially at the rotation place where you're in the hedge and get out of the hedge and you have to take a loss because you hedged too late. I'm almost starting to think that the best way to do this hedging is to hedge relatively early. So what I might do, we're at 2,800% margin level. I might set this up, and I have to visually watch this, right? Still going to do some training in the future where I can show you how to kind of set up these buy limit, buy stop orders and sell stop orders and kind of pre-plan if it moves that far. Nonetheless, what I want to do is I might hedge at 2,000% margin level, higher than I normally would. And then I'll hedge again for every order that hedge against every order that comes in from the algorithm. Because what's interesting, let me just say this, and I need to map this out in some sort of training because this is kind of my latest thinking. And I could be wrong, but this feels right. I have to kind of map it out. If you hedge relatively early and it goes against you, that hedge is going to be in profit. There is potential that the entire basket of trades could take profit and you're still in profitable hedge orders, and you can take profit on those also. The concept being, you hedged early enough, and the algorithm continued to add trades, which you can hedge each one of those. And that means that if my system never loses, and you're in some early hedges, your hedge could potentially be profitable also once everything closes out. Mark says, let me put this up there. I'm probably not thinking this deep, but Mark says, would you then close the first trade and first hedge if they go to break even? You could do that, but since that hedge is protecting the account, I'm going to let that hedge go all the way to where it's in profit. The basket of trades, the original direction, in this case, buy direction for gold, takes profit. Then I can close all my hedges at profit. We're going to have to practice this. I'm going to have to lay this out, and as I think about it verbally, it sounds really good. But I was just thinking about it today. I was just sitting there going, gold looked like it was really going to keep pushing. And obviously, this particular final trade here is in profit, so I didn't hedge. But I was about ready to hedge, but I was hedging early, right? And I'm like, maybe that's the key. I'm going to have to test it. To hedge early, let's say at 2,000% margin level. A lot of it is just feeling and the movement of the market. But then hedge, Mark says, definitely interesting. It is, right? And then hedge every order that comes in after that. So hedge early enough, and then every order that comes in after that, you hedge. You just match it. That's very interesting. So here's my thinking, and I'll finish this thought up, and we're gonna start practicing this and paying attention to it. If you hedge, let's say, so we're in 3 gold trades, and let's say we know the future, and it's going to go 10 deep. If you hedged at 3, so your 4th trade was a hedge, and then you hedged the 5th, 6th, 7th, 8th, 9th, and 10th. You get out of the 10th when it starts to turn around. You got out of the 9th, 8th. Potentially, watch me here, the algorithm could take profit at that point because you allowed it to do what it needed to do. And now you've got 3 hedge trades that are all in profit. So you go ahead and take that profit also. What? I might be onto something here. Just a thought I had during some coffee this morning. And why I haven't thought of this up till now, I don't know. Probably because I'm a gambling hack, right? You saw the warning at the beginning. Don't listen to a thing I say. I'm an idiot. I'm certainly not a financial advisor. But we need to test this. We need to test this. And it's, we're talking about gold right now. It's really the same thing. So I'll give you an example. I don't know if I'm explaining this well enough, but it's certainly in my head, and I will detail this out, maybe put some sort of PowerPoint keynote slide presentation together to kind of explain what I'm doing or thinking. But you could do that on standard pairs too. You could have a level that you just hedge on. So you hedge a basket of 5 trades. You hedge trade 6 as a hedge on the previous 5. You manage it. Obviously, if the hedge goes negative, you get out of it, take a small loss, you protect the account. But when the next trade in the sequence comes in, you hedge it. Next trade, hedge it. Next trade, hedge it. Next trade, hedge it. Somewhere along the line, you're protecting the account. You're letting the algorithm do what it needs to on that basket of trades. When that basket of trades takes profit, you'll have your hedges left over. You can close those down at potentially, if you managed it properly, all profit on the hedges. One reason I'm thinking of this is I know there's an EA out there that I've been testing, a robot, that will potentially do this. Just haven't had the time. I will put that together this winter. But nonetheless, I really want to test the theory, and I'll put it into a box here for you, where I hedge early. And I hedge early because I've overbid. And then I hedge every additional trade that the algorithm adds. I let the algorithm itself do as many trades as it takes. I hedge every one of them. When the algorithm takes profit on the basket, because it's ignoring my hedges, it's not managing those or paying attention to them or factoring them into anything. The entire algorithm takes profit on the basket of trades, and then I go ahead and take profit on all of the hedges that I had along the way. The entire account's protected. I just wonder if there's a limit to where you could potentially not have enough margin to hedge, but I can't imagine that. It's just math. You can hedge as much as you want if you've hedged properly and your margin level percent is 0. You could just keep adding trades. So, interesting thought. All right. Inside of this, and this is probably the only account I'm going to look at today, unless you guys have some sort of specific that you want to go through. Let me talk about, this is a great segue into what I want to talk about, or I said I was going to talk about, which is how to trade a small account. I have to start talking about this on a regular basis. I'm going to have to put together a detailed video. 99.9% of the people that come into my system have had their ass burnt, their ass handed to them. They've blown their accounts. So they start with a $1,000 account. And they blow it out. They overtrade it because they're trying to take that $1,000 account because they're like, wow, Terry's system is awesome. It never loses, blah, blah, blah. They overtrade it, overbid, and blow out their account. if you are going to be that person, and the reason you're doing it is because you lost your ass before in everybody else's system, and you don't trust mine, but you trusted enough early on, so you overbid, you overtrade. Do me a favor. Trade the one profitable pair feed and or the gold scalper feed and trade it at a high lot size, as opposed to taking all kinds of currency pairs and trading at a minimum lot size. The only reason you're doing that is because you have FOMO, fear of missing out. Trade one pair. I don't care if it takes you 2 weeks to close the trade. You'll be so much better off, because here's the deal. I can protect your $1,000 account. If you're in one pair, I can protect it and guide you and help you with a hedge trade, and the hedge in the way that I'm saying it now. Just a little bit of a new spin on it. But what I can't and don't want to do is see you in 30 different trades over 17 different currency pairs, and we're trying to manage all of that. It's just too much for the brain. But if you want to risk, quit over trading by taking too many currency pairs at a low lot size. The way to trade a small account is one currency pair at a time at a high risk lot size, if that's what you want to do. But it gives us the ability to hedge it and protect it a lot easier than if you're taking all 22 pairs, which someone is doing in our group, on a $1,000 account at a minimum lot size. And they just asked me, you know who you are, they just asked me to add gold. They're not getting any gold trades. I'm like, bro, you're going to, the moment the account starts, the moment the market starts moving, and back me up on this one, Mark, the moment the market starts moving and you have my entire algorithm on a $1,000 account, you'll lose it overnight. And the person said, well, I'm going to hedge and protect. It's hard to hedge and protect 22 different currency pairs at the same time. But, you know, desperation is also leading this person to do that. But, you know, I'm telling you right now, not that it's the holy grail, but right now, given the market, 2 weeks before the election, trade the OPP feed, trade the gold scalper feed, trade at a risky lot size if you want to be Mr. or Mrs. Risk. And I can at least help you and guide you to hedge that account if and when it goes too far. Don't come to me when your margin level percent is 125. Come to me when it's looking like it is right now. Hey, what do you think's going on? Like, this feels good right now. This feels good right now. 2,800% margin level. The third trade in gold is in profit. It's feeling pretty good. We had some major pushback against this. But I'm definitely going to hedge if this goes red, if the third trade goes red, because I want to hedge early. Now, I potentially always hedge at the rotation point, so you got to watch it. If the third gold trade right here goes negative, and I hedge, and it rotates back, and that hedge starts going negative, I just get out. Now, I will be doing a training where I can show you that if you're doing that type of thing in the MetaTrader 4 app in the desktop version, that it's very easy to drag the lines around and set a stop loss so that hedge, so if it comes back and hits the stop, maybe even in profit, a slight amount of profit, break even, you can set that and it'll automatically happen, so you don't have to sit there and stare at your phone, right? It's a lot easier to do on the desktop. Yeah, Mark agreed with me. Mark says, goes the account. Boom goes the account. Yeah, I mean, everybody's got to blow an account here and there. I don't want you to, but if you follow my method, where you do start small accounts and you trade aggressively like I am right now, you pull out your profits. You can pull out profits, and then one day you'll blow the account, but you've pulled out enough profit to where it's over and above what your original deposit was. I think you should do that, but it's a lot harder to manage an account when you overtrade. Overtrade means you're taking more currency pairs than the account really can handle. If you want to be aggressive and take massive risk, the final word is this. Trade one currency pair, or trade my 2 feeds, my automated feed, my one profitable pair feed, my gold scalper feed, one or the other or both. Trade them at a higher lot size. You basically see what I started at. A 15x on standard currency pairs and a 5x on gold and a $3,000 account. I've nearly doubled it in a month. Will you have the same results? Only if you've been doing what I've been doing up to this point. I can't predict the future, but I certainly can hedge the hell out of this and protect it. Probably save it from blowing 9 times out of 10. So I get 9 more cracks at the whip to double this account. So pretty exciting stuff. Real quick note. I may or may not be able to go live Friday morning. We'll see. I probably will be. But also remember, I'm going on the road. I'm traveling Friday. And you guys have already heard. If you want to meet up with me somewhere in Sandusky, Ohio, please do. Let me know. Message me. Other than that, here it is, Wednesday. A couple more days in the week here. Some really random news events, if you look at them. The fact that the euro moved a lot this morning under no high impact news. Who knows what's going on? Welcome to random Forex trading. So that's it. Appreciate you guys watching. I will let you go, and I'll see you in the group, and I'll see you tomorrow morning, tomorrow afternoon on the live session. Talk to you then.
Thank you for joining us on the Forex Trading Daily Live Show. Get access to all of the free trades with full auto trading at fxwithterry.com. Be sure to subscribe and get notified of the daily live stream. And get ready for your next profitable Forex trade.